Yeah, good morning, everyone. So we are seeing a positive trend in the US market. US market has reached again to its all-time high after a few day corrections. So last 10 days, what we are seeing that market is hovering around the top end of the market and not able to cross the new high. But it's on sideway uh, it's ahead of the larger up move. Uh, but if we see the Indian Asian markets are mixed. Some markets are correcting. Some regional concerns about Taiwan and all, and weakness in the economy of China and Hong Kong are weighing on the share price of Asian markets, and even the futures of the US market are also a bit soft in the morning trade. So some weakness are seen in Asian markets. Even the commodities are also seeing some weakness. Steel and iron ore both are again down today. Iron ore is again down by almost around 3%, and steel is down by around 1.5% in today's trade in China. Apart from that, oil is yesterday it saw a larger decline, so some bounce back happening, and aluminum and coppers are more of a flattish. So commodity is seeing some reaction on account of slowdown in China. So that is again and again prompting that China is seeing some larger slowdown, and one need to be careful from that perspective. So, for the Indian market, what we see that again similar to more of an Asian market, and what we were also struggling to cross the new high or to cross the higher level, and some profit booking is seen at a higher level. So, index wise, we are again likely to see a range bound trade in the today's trade. Now request technical team to take up from here.
Yes, thank you, sir. Good morning, all of you. Today, the market is likely to open on a flattish note and we're likely to witness some range-bound trading session during the day. On the technical front, we have witnessed that yesterday Nifty has made a new high at around 25,333, but fails to maintain a closing on a positive side above 25,300, which gives some sort of a cautious sign. Going ahead, immediate resistance will placed at 25,340. If it doesn't break that level, the upside momentum will be restricted, and if it gives the breakout, then positive momentum can be carried forward towards 25,430 to 25,500 levels. Whereas on the downside, 25,200, 25,140 will act as a strong support levels. We can say that definitely the market is a stock specific market, and one should initiating if any long calls, just carry on with the strict stop losses. Coming towards the bank nifty, yesterday we have noticed that the bank nifty was hovering nearby its moving averages on the spot basis, and it might be facing a very strong resistance of a short term moving average, says the 50 days moving average. Now going ahead, if it surpasses that level on the closing basis, which comes to nearby 51,800, then more positive momentum can be seen towards to 52,000, 52,200, whereas the support is placed at around 51,500 and 51,340. Coming towards the Fin Nifty, 23,900 and 24,000 will act as a crucial resistance level. whereas the support is placed at around 23,700 and 23,600. Stock specific, Cummins Industry looks very good on the technical front. This particular counter is on the verge of giving the consolidation breakouts, hovering nearby its 50 days moving average. We believe that a positive momentum can be seen in this particular counters towards at least 3960 levels. Currently, the stock is trading at 3800 mark, so one can take a long positions by keeping a stop loss of 3720 for a target of 3960. That's it from my end. Request technical
Yeah, thank
derivative
you.
to take a call.
Yeah, thank you. So, good morning, everyone. So, on the derivatives front, as you are seeing from the gift front, there is not much of a change on today's move from the opening front. While on the OI position also, we are seeing that the OI is right now currently the range bound momentum scenario, because at the 25,000 strike, we are seeing that the put at positions is holding strongly with the support on the intraday front at 25,300 level, while on the upper at 25,500 will act as an important resistance zone. Till the point of time, 25,200 to 25,500 range is not getting broken out. Till that point of time, we might expect the range bound momentum on the index front. Overall momentum seems to on the positive side, as you are seeing that the PCROI is also holding strongly on the supportive above the supportive base, due to which the OI position, PCROI and India VIX all are indicating the positive bias currently in the market. Till the time 25,200 to 25,000 mark supportive base is not broken out in the market on the Nifty front, while on the stock specific and index specific front, FMCG IT still looks positive, and we expect buying to be witnessed in today's session. Also, selective counters will be Gujarat Gas, SRF, Coforge. This three counter looks positive in today's day of trading session. So that's it from Better front. Thank you.
Good morning. Hindustan Aeronautics Limited, there is news that Cabinet Committee has approved acquisition of 240 aero engines for Indian Air Force Su-30 MKI aircraft at a cost of 26,000 crores. That's positive. On Keynes Technologies, government approved chip assembly testing and packaging unit in Gujarat worth 3,300 crores. The unit will have capacity to produce 6.3 million chips per day, and this was being anticipated, and it has happened. So this investment, the fruits of this investment will come out over next 3 to 4 years when the plant will get fully utilized. That's positive for Keynes. GR Infra Projects will sell Aligarh Kanpur Highway subsidiary to Bharat Highways InvIT. Sale value is not yet disclosed, but the investment that GR Infra had done in this subsidiary was 159 crores. So this is also positive. One IPO will be listing today. Premier Energies, we had given subscribe rating. Issue price was 450 rupees, and listing is expected to happen between 900 to 950 rupees. Market cap at let's say 900 rupees will be around 42,000 crores. And since the issue is good, we think that even institutional interest is likely to be good because of the size of the company. Premier Energies is an integrated solar cell and module manufacturer, ranking as India's number 2 in both categories, with an installed capacity of 2 gigawatt for cells and 4 gigawatt for modules. Premier is one of the very few players manufacturing cells in India where there are high entry barriers due to complex manufacturing process. For example, India's installed capacity for solar module is 72 gigawatt, while that for solar cells is just 8 gigawatt. So apart from Premier, only 3 or 4 other companies are there who are making cells right now: Tata, Adani, and Websol. So most of the other large module manufacturers like Wari, which is the number 1 company, and Vikram Solar. So all these kind of large manufacturers are only in modules and not in cells. With strong tailwinds from the industry side in form of government push for local manufacturing, like ALMM, which is which gives preference to locally manufactured modules in case of government orders, and also high custom duty of 40% on import of module and 25% duty on import of cells. So these things also help companies like Premier company is incurring capex of 3,300 crore over next 3 years, which will increase its module capacity from 4 to 8 gigawatt and cell capacity from 2 to 6 gigawatt. So these capacities will come on stream in FY27 mostly. So to FY27 and 28 will witness huge growth. Upon comparing the company with peers, we observe that Premier will be the only listed player in solar cells. So this is also the reason that it has higher margins. EBITDA margins in FY24 was 15% compared to peers at 9% because most of the peers are only in modules. As its capacity is underutilized currently, as most of the even incremental capacity came in second half of FY24, so it was not fully utilized. That's the reason that utilization is a bit lower and asset turn is also slightly lower, which will improve in FY25 and 26. So last year it did ROC of 20%. We think this will gradually increase as the fund utilization improves going forward. At a listing price of 900 to 950, the stock would trade at FY26 PE of 50 times and FY27 PE of 30 times. So we think that if someone has a longer term horizon of 1.5 years, then they should remain invested, and in fact they can even consider accumulating upon listing. And also stock will command some scarcity premium because it will be the only listed cell player, and likely to grow at 40 to 50% CAGR for next 4 or 5 years. So that's it from my side. Thank you.
Yeah, apart from this, what we had seen that the acreage or coverage of the crop in Kharif season has improved. Specifically to note is that the maize crop has shown a good increase of almost around 7-8%. This is specifically positive for the companies wherein companies are manufacturing ethanol from food grain. In fact, government has given higher prices for production of ethanol from the maize as compared to rice or sugarcane as well. And considering the higher crop in this, all these companies like Globus Spirit or BCL Industries or even the Associated Alcohol who have Gulsan Polyol, all these companies have put up grain-based distillery and were struggling in the last year because of lower availability of the food grain to produce and the higher prices. But with these higher crop, there is a possibility that these prices of these crop will remain lower, and these companies can benefit from the higher availability of the maize or broken rice. So the acreage is high, and also the yield will also be better because of the good rainfall. So all these companies are likely to see a positive trend. Apart from that, sugarcane acreage is marginally up. Last year it was 57.11 hectare, which has increased to 57.68 hectares. Sugar production is expected to be gross sugar production is expected to be more of a similar to last year. Whereas the diversion government people are expecting of around 4 million ton to ethanol, where the recently government has put up a policy of conversion of B-heavy and syrup to the ethanol, and this will have an additional income for the all sugar mill company. So in all sugar company, we find Dhampur Sugar as better play and at reasonable price, and has an immediate benefit of increasing the profitability on account of higher conversion of ethanol. So positive for Dhampur Sugar. That's all from us. Yeah, Harshal, are you continuing commodity?
Yes, sir.
Okay, fine. Thank you.
Yeah, thank you, sir. Good morning, everyone. So in today's session, we are expecting gold prices to cool off. Prices are expected to test 71 400 to 200 levels on the downside. So any pullback till 71 750 800, one can initiate a sell with a stop loss of 72,000. Again on downside, 71,000, one can enter long with a strict stop loss of 70,800. Prices are hurdling around 72,000, 72,300 mark. So unless 72,300 is taken out, we feel some profit taking is expected in gold. Whereas silver prices are attractive at 84,000 levels, and for trading purpose, one can initiate a buy with a stop loss of 83 500. However, on the upside, 85 200 to 85 700 is the resistance zone whereby we may see profit taking. So for trading purpose, one can initiate a buy, and again on the upside, 85 700, one can initiate a sell with a stop loss of 86 300. And in crude oil, we are expecting a pullback. So buying around 6190 with a stop loss of 6130 is recommended. On upside, 60 to 80, 63,000, 6,300, where one can book profits. Natural gas also, we are expecting a pullback. So buying around 181, 180 with a stop loss of 175. On upside, it can test 190, 192 levels. So buy on dips is the view in natural gas. In copper, we might see some consolidation from 807 to 797, 795 levels. So there could be some consolidation. So buying around 795 is recommended with a stop loss of 790. Again on pullback, 805, 807, one should book profits. So fresh buying, we expect above 808 levels. And whereas in zinc, if prices are sustaining 264, then we might see some pullback. But however, 267, one can again sell with a stop loss of 269. So that's it from us. Thank you very much.